Hello and welcome to the channel. Today, we're diving deep into a topic that's causing a lot of confusion for property owners, making tax digital for landlords. It's a huge change to the UK tax system, and if you're a landlord, you absolutely need to know what's coming. We'll break down exactly what MTD is, who it affects, when it starts, and most importantly, what practical steps you should be taking right now to get ready. We'll also bust some common myths along the way. So let's get started. First up, what exactly is making tax digital for landlords? Put simply, MTD is HMRC's new system for how you report your rental income. Right now, you probably submit one self-assessment tax return each year. Well, MTD is changing that. Instead, you'll need to keep digital records of your income and expenses and send regular updates to HMRC throughout the tax year. For landlords, this is officially known as MTD for income tax. It's important to understand that MTD doesn't completely replace the self-assessment system, but it fundamentally changes how your rental information is collected and submitted to HMRC. Now this leads to one of the biggest misunderstandings out there. Does MTD mean you'll have to pay your tax 4 times a year? The answer is a clear and simple no. This is just a myth. MTD does not mean you'll be paying tax quarterly. Your tax liability is still calculated on an annual basis, just like it is now, and your payment dates don't automatically change. Those quarterly submissions you'll be making are just updates of your income and expenses. They are not tax bills. Your final tax position for the year is only confirmed at the end of the tax year, after you've made all your submissions. So, who does MTD for landlords actually apply to? MTD for income tax applies to individual landlords, not those who own property through a limited company. It will apply to you if you receive income from UK property or even from property you own overseas. It doesn't matter if you own just one rental property, a whole portfolio of them, or even if you own properties jointly with other people. If you're an individual landlord, this is for you. However, if your property is owned through a limited company, you can breathe a sigh of relief for now. MTD for income tax doesn't apply in that case because limited companies are taxed under corporation tax rules, which already have their own MTD system in place. And what about different types of properties? Does MTD apply to both residential lets and holiday lets? The answer is yes. MTD for income tax covers residential rental properties, furnished holiday lets, at least while that specific tax regime still exists, and even mixed property portfolios. The general rule of thumb is this. If your rental income is currently reported through your self-assessment tax return, then it's highly likely that MTD will apply to you once the rules come into force for your income level. This brings us to a crucial question. What is the income threshold that triggers MTD for landlords? HMRC is introducing MTD in stages, and it's based on your gross income from property, not your profit. From April 2026, MTD will become mandatory for landlords with a gross property income of over £50,000 a year. Then, from April 2027, the rules will extend to landlords with a gross property income of over £30,000 per year. HMRC has hinted that even lower thresholds might be introduced in the future, but no firm dates for that have been announced yet. And just to be crystal clear, when we say gross income, we mean the total amount of rent you receive before you deduct any of your allowable expenses. So let's say MTD applies to you. What exactly changes in practice? This is where you'll see the biggest shift from the current system. Once you're in the MTD system, you must keep all your records digitally. You'll need to use MTD-compatible software to do this. You'll then be required to submit quarterly updates of your income and expenses to HMRC. After the tax year ends, you'll also have to submit an end-of-year statement to finalise your figures and then make a final declaration. This means you could be making up to 6 submissions to HMRC each year, instead of the single self-assessment return you're used to. It's a significant increase in reporting frequency. Let's talk a bit more about those quarterly updates. What are they? A quarterly update is essentially a summary of your rental income received and your allowable expenses paid out during that 3-month period. It's really important to remember that these are not tax returns. They don't calculate any tax you owe. Think of them as progress updates that keep HMRC informed about your financial situation throughout the year. And here's some good news. If you make a mistake in one of your quarterly updates, it's not the end of the world. Errors can be corrected later on. So, What happens if you do make a mistake in a quarterly update? As I mentioned, these mistakes aren't final. The system allows you to correct them, either in a later quarterly update or when you submit your end-of-year statement. However, and this is a big however, consistently poor record keeping will increase your risk of getting queries from HMRC, facing potential penalties, and generally adding a lot of stress to your compliance process. The whole point of the MTD system is to encourage better and more accurate record keeping throughout the year, not just in a frantic rush at the deadline. With all that in mind, what practical steps should you be taking right now? Even if the MTD thresholds don't apply to you just yet, preparation is key. The first and most important step is to move to proper digital record keeping. Start using a spreadsheet or simple software to track your finances. Make sure you understand your gross rental income figure. Get into the habit of tracking all your income and expenses clearly, with dates. It's also a really good idea to separate your personal and rental finances if you haven't already. Review your current systems and ask yourself, will this work under MTD? Waiting until the last minute will only create unnecessary pressure and potential problems. A common question we get is, do I really need to buy new software? The short answer is yes. Once MTD applies to you, you must use software that is compatible with HMRC's MTD system. This could be dedicated accounting software, or it could be what's known as bridging software, which can link your spreadsheets directly to HMRC's platform. The absolute key requirement is that the software you choose must be able to submit your data directly to HMRC using the new MTD rules. You won't be able to just type your figures into the Government Gateway website anymore. Let's quickly bust a few more common myths about MTD. We've already covered the paying tax 4 times a year myth, which is false. Another one is that HMRC will calculate your tax bill every quarter. This is also incorrect. The quarterly updates are just summaries of figures. The final tax calculation happens at the end of the year. Finally, some people worry that MTD will remove their allowances and tax reliefs. This is not true. MTD is a change to the reporting process, not the underlying tax rules themselves. All your usual allowances and reliefs will still apply. So, what happens if you just ignore MTD once it applies to you? Frankly, this is not a good strategy. Ignoring MTD is not an option once you fall within its scope. Doing so can lead to penalties for non-compliance, problems with filing your tax returns, and will almost certainly lead to increased attention from HMRC. MTD is mandatory, so it's far better to get ahead of it. To wrap up, here's our final advice for all landlords. Making tax digital is one of the biggest changes to UK property tax reporting in a generation. In our experience, the landlords who will cope best with this transition are those who prepare early, who have a clear understanding of their income, who set up simple and effective digital systems, and who get professional advice long before the deadlines start looming. Don't leave it until it's too late. If you're unsure whether MTD applies to you, or you just want some guidance on how to prepare, it's always better to check early and get a plan in place. We deal with HMRC, so you don't have to. For expert guidance, feel free to get in touch. Thanks for watching. We hope this has cleared up some of the confusion around making tax digital for landlords. If you found this video helpful, please give it a thumbs up and consider subscribing for more essential updates for property owners. See you in the next video.